technical analysis with the double bottom chart pattern, which is such a common bullish reversal pattern that it's not too extraordinary to see situations like this, where double bottoms can be connected together by sharing some common levels. It's also possible for double bottoms to neatly form within the exact same range as previous double bottoms. Interestingly, this next double bottom centers around the middle portion with the downswing made up of a gravestone doji and a large red candle. The second half of the pattern isn't made up of a full swing point, but rather just those two candles that rebound from the 140 to 139 range from the previous upswing point. The upper boundary is extended up to 143 due to the long upper wick in the middle from the gravestone doji. The distinct outline of the W shape can be seen more clearly by just looking at closing prices. In any case, the pattern finishes quickly with that one large green candle closing well above 143. Then, as with any successful double bottom reversal, the chart keeps closing above the upper boundary at 143, which will continue to mark a major area of support well into the future. Here is a similar situation, except the first half of the pattern is where there isn't a full upswing, but rather just two medium to large sized candles that span most of the double bottoms range. Again, looking at just closing prices outlines the W shape more clearly. 1722 defines the upper boundary. It runs through the upper portion of the real bodies for 4 candles in a row to define the first half of the pattern. Then when the pattern finishes, it's relatively quick as well, with strong closes higher during the formation of a quick 3 methods rising candle pattern. Later, there's a bearish retracement to this steep uptrend, which is gradually reversed, with the development of this area, which could still be considered a double bottom that's more spread out and comprised of flatter upswing points. To further validate this range, you can see the levels are highly influential before and after the double bottom. This actually makes up the middle and bottom portion of a larger double top. Later, when 1790 is recontacted, there's a compact double bottom similar to what we've seen in previous examples. Over here is the opposite situation of what we saw earlier. It's a larger double bottom with clear and sharp upswing points. In between them is a small double top reversal defining the middle and upper portion of this bullish reversal once there's that characteristic conclusion to the pattern, when there are strong closes above the upper boundary with larger green candles that are often part of 3 methods rising and 3 marching soldiers candle patterns. Here's possibly one of the most compact double bottoms possible. However, it still has those 3 key points that construct the main outline of the pattern based on closing prices. Again, the range can be expanded to be more comprehensive by going up to the highest high and down to the lowest low. Sometimes when the outline of a pattern is made up of candles rather than full swing points, the chart may not fall back into the exact same range, but it can get quite close. Over here, a slightly less compact double bottom, but one that has more well-defined swing points. When the chart soon drops back into this same range, another double bottom forms. It presents a noticeable incline. Then the extra bullish sentiment is confirmed when an extremely large green candle rockets above the upper boundary. Essentially, this makes a double bottom where each swing point is a bullish reversal area made up of one double bottom pattern each.